attorney Laura Anthony, founding partner of Legal and Compliance, a full-service corporate securities and business transactions law firm. Today is the continuation in a LawCast series discussing sections 16 and 13 of the Securities Exchange Act related to insider reporting requirements and short swing trading profit prohibitions. Under section 16, every person who is an insider must file an initial statement on Form 3 within 10 days of the event triggering the filing, and must file continuing changes on Form 4 within 2 business days following such change. Transactions required to be reported on Form 4 include acquisitions and dispositions of securities, including purchase and sales of securities, exercises and conversions of options, warrants, and other derivative instruments, and grants or awards of securities from the company. An annual report on Form 4 is used to report changes in information that should have been but were not included in prior Forms 3 or 4. As mentioned in the last LawCast, Section 16 is intended to prevent the unfair use of inside information and to discourage speculative trading by insiders by requiring them to report holdings and transactions in the reporting company's securities, and by requiring them to pay over to the company any profits realized from any purchase and sale of the reporting company's securities within any 6-month period. Section 16 also precludes insiders from making any short sales or other hedging securities transactions in the reporting company's securities. In addition to the individual reporting requirements, the SEC requires that the reporting company itself disclose in its annual proxy statement the names of insiders who have failed to make required Section 16 filings or failed to timely file their reports. Also, the company itself must include a check-the-box disclosure on the front of their Form 10-K if there has been Section 16 violations, and a narrative discussion within the body of the 10-K itself. The first gating question for a Section 16 analysis is who is an insider, and therefore who is subject to those reporting requirements and trading prohibitions. On the top line, an insider is an officer, director, or 10% or greater shareholder. However, not all officers are Section 16 filers. A Section 16 filer for sure includes the principal or chief executive officer, the principal financial officer, and the principal accounting officer, and any officer in charge of a business, unit, division, or function. Beyond that, the key determination is the level of control and ability to perform significant policy-making functions on behalf of the company. The SEC recognizes that reporting companies may give titles to individuals that include terms like vice president of or director of, which individuals are not really in a high-level control position. These individuals are not Section 16 filers. The Section 16 filer must have control. As with other SEC rules and regulations, 10% ownership refers to beneficial ownership and not the legal title or record ownership in the books and records of the company. Beneficial ownership is determined by the person's ability to control the voting power of the securities, investment decisions related to the securities, such as whether to buy or sell, and monetary interests in the securities. A monetary interest is the direct or indirect ability to profit from a purchase, sale, or other disposition. An insider is considered to have a beneficial ownership of securities that are held by their immediate family member that live in the same household. Immediate family members include grandparents, grandchildren, siblings, and in-laws, and of course, your spouse, children, and parents. In the next LawCast in this series, I will continue with specifics under Section 16. Even for the most experienced practitioner, the rules under Section 16 are complex and contain a number of gray areas and potential traps for the unwary. Since insiders should always consult with counsel before engaging in any transactions in the company's securities. I'm securities attorney Laura Anthony, founding partner of Legal and Compliance. Should you have any questions about today's topic, please visit securitieslawblog.com and lawcast.com or contact me directly. Inquiries of a technical nature are always encouraged.